Welcome to The Explainer. Today, we're diving deep into the complex and, honestly, high-stakes world of micro-lending in South Africa's township economy. It's a story packed with immense opportunity, some really groundbreaking tech, and, yeah, some pretty perilous risk. Okay, let's kick things off with a number that's really at the heart of this whole story: 5 trillion rand. Yep, you heard that right. That is the estimated annual turnover of South Africa's informal economy. It is just a staggering figure, and it represents a massive and, for a long time, a largely untapped financial market. And whenever you have a market that big, full of underserved consumers and businesses, well, it's no surprise that it's kicked off what you could call a modern-day gold rush. You've got a whole new breed of financial technology lenders, and they are all racing to stake their claim and unlock all that potential. But you know how it is with any gold rush, right? While fortunes are being chased and innovation is flooding the market, it always begs the question, who's really paying the price for all this? And the answer, as you're about to see, is way more complicated than you might think. So first up, let's really get our heads around the sheer scale of this so-called undiscovered country. Let's try and understand what exactly makes it such a prime target for all this financial innovation. This whole economic ecosystem has a name: Kasinomics. And look, this is not some fringe market we're talking about. It employs 13.4 million people. That makes it the country's second largest source of jobs. I mean, it is the engine room for a massive part of the population. Okay, so who are the prospectors in this gold rush? The ones selling the picks and shovels? We're going to look at 3 really distinct players, and each one has a completely different set of tools and a totally unique philosophy. First on our list is a company called Optaja, and these guys have gone all in on artificial intelligence, putting it right at the center of everything they do. They've partnered with giants like Vodacom and MTN to dish out loans in real time. And their AI model, well, it's pretty wild. It's not your standard credit score. Nah. Their AI goes way deeper, using behavioral data to figure out what they call their big secret, the exact credit limit an individual can handle without defaulting. It is a super high-tech strategy, and it's designed for massive, massive scale. So the company's CEO, Salvatore Anglada, he frames their mission as one of empowerment, using technology to open up crucial financial access for people who have historically been completely shut out of the system. Okay, now let's flip the script completely and look at Kula Capital. They are not playing the mass market personal loan game at all. Nope. Their focus is on sustainable growth for small township businesses that need that crucial working capital to get contracts done. Their model is this fascinating blend of tech and a real human touch. I mean, they operate mainly through WhatsApp, which makes them incredibly accessible. And they don't just look at a simple cash flow statement, they actually assess the project itself and even help their clients with costing to make sure the loan is actually going to help them grow. And this quote from the co-founder, Katie Dodge, it just says it all, doesn't it? The goal here isn't just about lending money. It's about making sure the debt is used as a powerful tool to create wealth, not as a trap to extract it. All right, let's move up the value chain a bit to our third player, Lulalend, or now they're just called Lula. They're targeting the more established small and medium businesses, the ones that have already proven themselves and are now ready to scale up in a big way. And Lula's strategy is really, really smart. See, they started out as just a funder, but now they've become a full-blown SME bank. Why does that matter? Because it gives them access to all their clients' transaction data, which lets them make faster, better, and bigger funding offers. They're basically betting on growing right alongside their customers. So, you've got all these innovators, all this capital, all these new ideas flooding into the market. It should be a total success story, right? Well, this is where that story takes a sharp and, frankly, a deeply troubling turn. You see, the market is basically split right down the middle. On one side, you have the survivalists, people who are borrowing just to get by, day to day. On the other side, you have growth-oriented businesses, like a local Spaza shop, trying to use that finance to expand. And you can probably guess the players like Kula and Lula are focused squarely on the growth-oriented folks, while that mass-market, AI-driven model is built for the survivalists. And here is the crazy part. If you just look at the top-line numbers, things look incredible. South Africa has a 98% formal financial inclusion rate. I mean, that means almost every single adult has access to some kind of financial service. By global standards, that is a massive success. But And this is a huge but. Here's the paradox. An estimated 12 million adults in the country are now considered over-indebted and are facing serious financial distress, so access to finance has not translated into financial health. And the situation is getting worse, and it's getting worse fast. Just look at this. In a single year, the proportion of adults who are considered financially healthy has just plummeted, from an already low 24% all the way down to just 16%. So what's the real takeaway here? The gut punch is that for the majority of people, this flood of easy credit, it isn't fueling businesses. It's just being used to plug holes in the household budget. A shocking 43% of adults are now using credit just to buy food. And research actually links these survival loans directly to a lower quality of life. So this failure in the formal market, this inability to provide productive, healthy credit, has created a dangerous vacuum. And it's pushing desperate borrowers down a much, much more treacherous path. This table just lays it all out, plain and simple. Formal lenders, because they're risk-averse, they reject nearly 2/3 of applicants. So where do those people go? They get pushed right toward illegal loan sharks or machinistas. These guys almost never say no, but the cost is just unthinkable. We're talking interest rates up to 100% a month, and tactics like taking ID books as collateral, trapping people in these vicious, inescapable cycles of debt. And what this creates is a pretty grim reality. The financial system has basically become a two-lane highway. The fintechs are building this beautiful, smooth, fast lane for strong, growing businesses. But the vast majority of people, they're being forced off that main road and onto a dangerous dirt track, one that's run by predatory toll collectors. So we're left with this final, powerful question. The potential of this 5 trillion rand economy is immense. It's like a young calf. But is this financial gold rush going to nurture it into a powerful economic bull? Or is it just going to be picked apart by wolves, leaving millions of people in a worse position than when they started? That, right there, is the trillion rand question.